Hello everyone, welcome to Student Fund Manager. I am Tuhinshu Sardar and as always, it's great to see you here. The reason we are making this video today is I was not really happy with how I was running this portfolio. So I had decided to liquidate the stocks and start afresh. And in this video, I am going to discuss about that. So at first, let's go back to what we have done with our portfolio. So we have named our portfolio Student Managed Fund Series 1, and we had started this on 9th of May this year, and the date of closure was 16th August when we have sold all of our stocks. So we had invested a total of 17,100 rupees, and the income plus dividend and withdrawals, they were 153.2 rupees, and the taxes and charges were 240.75 rupees, and the portfolio returns were 418.85 rupees, which is 2.45% returns in roughly 3 months. So as you can see, our top 3 performers in 3 months were ITC Limited with 14.95% returns, almost 15%, SBIN with 13.45%, HDFC Bank with 12.28%, and the bottom 2 performers were Power Grid Corporation with minus 5.98% return and ONGC with minus 16.18% return. And over here we have the graph of how our fund value looked like during the portfolio operation period. So when it comes to my experience managing this fund, I would say that first of all, I am very passionate about investments and portfolio management. And it's not just I am pursuing this as my career, but I love to do these things and it fascinates me. So it was great doing it, but I have learned some things the hard way and also some hard things. And those are: number one, it is not always possible for you to do everything perfectly. So it is very important to limit the number of things or offerings that you are doing within your capacity. You cannot stretch yourself too much for a long period of time. So that's one thing. And because of this, I have actually integrated Facebook uh, with Student Fund Manager series, because this gives me more of an ability to also inform you things through text rather than only through making videos, because it is a long process and at times you don't get the time to make these videos. So I don't really want to be inconsistent with something like this because I love to do it. And in number two, I have learned that brokerage charges and STT, they are very high, especially when you are maintaining a portfolio of many stocks. So when the asset under management is lower, I have decided to stick to a lower number of stocks to increase the return as well as do better with the acquisition cost. So honestly, it was pretty useless numbering any of these things because I just summed it all up in 2 points. But anyway, let's move on to what we have learned and how we are going to actually use it. So for my next fund, I will be using these strategies to manage my fund and keep everything in check. Firstly, we are going to follow an investment strategy which is used by focused equity and contra fund schemes. So what happens in focused equity is the number of stocks in which the amount is allocated is less than 30, and because of this there are many advantages, such as you can keep track of the stocks more thoroughly, and the returns are also likely to be better if they are more researched and you know them inside out. So these are the few things: uh, easier management actually, and more volatile and focused, and the concept of contra fund. This is using the contrarian investment approach, and I will make another video to explain what contrarian investment strategy is. But in a nutshell, what we are going to do is we are going to sell overvalued and buy undervalued. So not only are we going to be holding these stocks, but we are also going to be trading these stocks on a basis so as to increase our returns. And in number two, there is research and analysis on those stocks. So with a predetermined investment horizon and a good entry and exit strategy, we can increase our returns or our accuracy. And as we have covered already, investing and trading stocks with good fundamentals in large volumes. So we are going to do this to decrease acquisition cost. We have covered this, and we are going to be only trading with companies with good fundamentals, and I would be focusing more on blue chip stocks because the information is more widely available for the initial period. And when calculating our portfolio returns or whatever, we are going to keep it simple so that there are more standardized metrics to compare our fund performance with those of the index fund as well as other schemes run by actual asset management companies. And as we have again already covered, we are going to use Facebook to provide more consistent updates and also upload our videos. So these are the few things that I had to discuss with you on an urgent basis because I have not been uploading my videos for a long time, but I am back and I will continue it with better returns. Bye bye.